This is the Financial Intelligence Podcast, brought to you by the UK FIU. The UK Financial Intelligence Unit has a national remit to analyse information on economic crime received through suspicious activity reports. All views expressed by panellists on the podcast are their own and not necessarily those of the NEC or the UK FIU. Hello, and welcome to the UK FIU podcast. My name is Alice Bolton, and I'm one of the illicit finance leads in the National Economic Crime Centre, also known as the NEC. In today's podcast, we are talking about professional enablers and the various ways professional services sectors can find themselves facilitating crime, such as money laundering. I'm really pleased to welcome our panellists who are all joining us virtually today. We have Edgars Pastars, advisor to Finance Latvia Association and partner at Cobalt, which is a pan-Baltic law firm. Tommas Kaplan, Chief Compliance Officer and MLRO for Von Poll Real Estate. And Jacquie Griffiths from the UK's Office for Professional Body Anti-Money Laundering Supervision. Before we go into the main part of the podcast, I'm going to ask each of our panellists to provide a brief overview of their respective roles and the work they do in the AML space. Edgars, let's start with you.
Hello, everyone. My role is split in two parts. I'm working with policy questions for Finance Latvia Association, so local IML and CT sanctions proliferation issues. And the second part is more practical. I'm risk officer and partner at Cobalt Latvia, the pan-Baltic law firm. So I'm dealing with not to becoming professional enabler with my law firm. So preventing the crime and managing risks on a very practical level.
Great, thank you. I'll hand over to Tommas now.
Thanks, Alice. Yeah, like you said, I'm the Chief Compliance Officer and Money Laundering Reporting Officer for Von Poll Real Estate. It's one of the largest real estate brokerage company in Europe. We have more than 1,700 real estate agents working for us. So a lot of stuff to do for my department. So my focus is, of course, money laundering prevention and investigation and stuff. I'm working since 15 years in the real estate market, in the real estate sector. So I have a good experience in that point. Before that, I was a detective, a superintendent for counterterrorism here in Germany and working undercover, looking behind the finances of the terrorism. And now in my what I'm doing, I'm leading a working group, money laundering in the real estate sector for the German PPP, the Public-Private Partnership, Anti-Financial Crime Alliance. And we already published like 4 typology papers on actual risks and typologies. And of course, I'm having some activities with the FATF regarding real estate and working as an expert for the Council of Europe in different projects.
Thanks, Tommas. And Jacquie.
Hello, everybody, and thank you for listening. My role at OPBAS is to promote, encourage and facilitate information and intelligence sharing between our professional body supervisors, law enforcement, statutory supervisors and other bodies. I'm also the professional enablers lead for OPBAS and for the FCA more widely. And along with Alice, I am the co-lead for the UK's professional enablers strategy, which we may hear a little bit about as the podcast continues.
Great, thank you. Now, when we talk about professional enablers, we are including a broad set of services such as banking, real estate, legal, accountancy, etc., as well as a really broad spectrum of mental intent, from those who are complicit in enabling crime through to those who might be negligent in their AML compliance, turning a blind eye, or simply not asking the right questions to properly inform themselves of the money laundering risks associated to a specific customer or transaction. Today, we are focusing on the non-financial sector, so DNFBPs. And Tommas, you have great insight in relation to the real estate sector. How can regulated sectors, such as the real estate sector, find themselves enabling criminal activity, such as money laundering?
Thanks, Alice, for this question. Obliged parties in the real estate sector, especially real estate agents, facilitate illicit financial flows by lending their expertise and credibilities to criminals. And this is, I think, one important point. Many real estate agents don't realize that they want their expertise and their names And that comes to that personal position and reputation serves to minimize suspicious over criminal activities, especially if you want to buy or sell a property. For example, you are a criminal, you want to buy a property. If you would go directly to the seller, it would be difficult to convince maybe the seller, if the seller had a feeling that maybe you are a criminal or have a criminal background. And it's interesting that seller has a better sense for these issues than real estate agents, because the real estate agents has, of course, another aim. That's why they're using real estate agents. And they're using real estate agents. Why? They're able to buy very fast a property. You are a criminal and you want to buy a property, you go to real estate agents. For that, you can have like a quick transaction. But before I get more into this question, I want to mention a few factors that can facilitate money laundering in the real estate sector. There you have the possibility to transfer large values during real estate transaction. You have like a value stability, a high potential return, and you have a high legal certainty provided by the land or the property register. This is one important thing for money launderer or for criminals. If you buy like a watch or if you buy like a car, it can be confiscated very quick. But to confiscate a property, it's very difficult to have this, especially like in Europe. And of course, real estate offers the appearance of seriousness and legitimacy and normality. And what is the main point is that the true beneficial owner can be obscured through complex and nested corporate structures. And there are many, many more, and I can talk like half an hour. Let me give you just one last point to that. What is the main problem? I see real estate agents face the challenge of obtaining customer due diligence information from their clients, who are often less willing to provide personal information to real estate agents than to banks or, for example, independent legal advisors, especially when it comes to the question of the source of funds and a source of wealth. And this reluctance may stem from cultural reasons or a lack of awareness of the role of the real estate agents in this AML and CFT regulations. So where buyers or sellers are represented by a lawyer, there you have also the attorney-client privilege may further impede this access to these key informations, and such as the identification of the beneficial owner or the purpose of the transaction or the source of funds or source of wealth. These are also challenges who maybe unwittingly enables real estate agents to be professional enabler without knowing that. I think it's a really good example from my practice. We have like a customer. He wants to buy a property for 2.4 million for his own living. He has already a company which has around 26 million on liabilities from deliveries and services. So the first point you see, okay, he has a company. There's a lot of money in this company. Maybe from this company, he has his source of funds. And we found in the media check, we found an article in which the company has invested 10 million in another company. So everything looks pretty fine, looks very legal. And however, the funds are not to be paid from German funds, but should come from abroad. That was his idea. And he had presented us with a proof from a trustee that a 3 million figure is expected from Singapore. So we were surprised. Why is the money coming from Singapore in a 3-digit million? So after our inquiry about the funds and the connection with the German company, as well as the source of the funds from Singapore, and the question, what did he do in the abroad? Is he a trader? What is he? He explains that the money just came from Indonesia and it's not our business to ask this kind of question. It's the business of the trustee to get the money to Germany. So what I did is I submitted a suspicious activity report, and then he convinced the seller to sell the property to the buyer. But we said, don't do it. His finances are not really clear, but the buyer convinced the seller. So he bought the property at the end. I submit a suspicious activity report, and we find out that the customer was an investment fraudster. So everything was just a cover story. The alleged transactions from abroad only served as a cover story to make the money obtained from this investment fraud plausible and nothing else. And he has money, he gets this money, but it's like from investment fraud. That's why it is so important to ask this question of source of funds and source of wealth.
Thank you. A really good case study of how the real estate can enable criminal activities such as fraud there. What advice would you have for the real estate sector to ensure that they can detect and then mitigate money laundering risks? So what should they be looking out for?
I really want to start with some three general recommendations. What I want to really recommend is that policymakers, law enforcement, supervisory authorities, financial institutions, and of course the non-financial sector should collaborate to pool this knowledge and expertise, an appropriate risk-based approach. Information sharing is crucial in this context, and this exchange and discussion of this general and specific money laundering and terrorist finance risk can take place through a formal or informal events. So in Germany, we have twice a year, the FIU has an online event for the non-financial sector to share typologies and what are the current emerging risks. And what is really, really important to share case studies. In Germany, it showed, I can give Germany as a good example, that the public-private partnership, Anti-Financial Crime Alliance helped a lot to collaborate. The working group I have there's the Federal Criminal Agency, we have the FIU, we have the financial and non-financial supervisory bodies, we have banks, we have real estate agents, and so on. We have the notaries, lawyers, everyone is in this group. It's a big group. And we are discussing a lot of typologies and case studies, of course, anonymized and not with clear names. And we develop typology papers. I want to mention, just because of the time, three recommendations for real estate agents. In property transaction, it is important to know the norm. What is a norm? What is a standard for a real estate agent? And any deviation from this can always be assessed as a red flag. And red flag means to establish enhanced due diligence and to ask then the right question about the source of funds and the source of wealth. And one important point I always explain, before that I had another training with some real estate agents, and I explained them criminals who want to launder their money through property transaction, or those who also commit loan acquisition fraud through property transaction, think very carefully about how they do this and what exposure the property in question has. That means when you sell a property, always think, I want to launder my money, how I would do it in this property. What is the intent behind this transaction? If you have maybe a criminal, what is I call it the risk exposure of the property for money laundering. And the last point, without going too deep into it, is determining the source of funds and wealth. I think this should be the main job of a real estate agent, to find out where's the money from to buy this property. There are a lot of red flags and indications, and we can talk a lot about this, but ask this question. Where's the money from you want to buy this property? And if it's a high value property, where's the wealth to buy this? Because many people who buy properties for 1, 2, or 3 million euro, they have the money. They don't need money from banks and stuff. They have the money. There you have to ask, where did you get this wealth? And then you have to document all this question. And then you will find out there's a lot of suspicious activities out there.
Yeah, some really key points there around kind of source of funds or the source of wealth for purchases of property. So, Edgars, we've mentioned how the real estate sector might find themselves enabling criminal activity through property transactions. Can you talk us through how the legal sector can enable criminal activity such as money laundering? What are the indicators of enabling activity in the legal sector?
I would say lawyers can be instrumental to enable money laundering. Each money laundering scheme, it needs paperwork, right? And lawyers are great at drafting several contracts, articles of associations, and so on and so on. That's why money launderers need lawyers, and they use their services. Lawyers can be abused in a different way, directly or indirectly, willingly, or when lawyers are willfully blind, or just naive, or the case is just coincidental. Regardless of which type of abuse this is, it is important that lawyers are aware of money laundering risks and understand how this can play out. Lawyers usually tend to see something that is legally permissible and only focused on that. For example, bearer shares are legal in many jurisdictions, but the risk they pose is a different thing. And they're very instrumental for money laundering. And sometimes lawyers focus on what's permissible rather than on where the risk is, how legal structures can be abused for enabling of money laundering. Speaking of lawyers, we must understand that the risks are completely different across several jurisdictions. And the main factor here is legal privilege, how it is regulated in each particular country. For example, whether a lawyer can hold funds of the clients and refuse to provide information to the bank, or is a lawyer subject to some reporting obligation? In what extent this obligation applies to the lawyer? And the greater the legal privilege is, the greater it can be abused, and lawyers in those jurisdictions are subject to more, I would say, a favorable attitude from criminals, and they can be abused more there instead of jurisdictions where the legal privilege is regulated in more narrow sense. Sometimes lawyers act as nominee directors or beneficial owners without disclosing the real person who they represent. And that's actually the main sin, I would say, if lawyers are acting like this. In some countries, lawyers are representing clients when the clients want to obtain a mortgage loan to buy a real estate. And some jurisdictions would be considered atypical. And that's why I agree with Tommas that we need to understand what is a typical behavior and what is atypical in each specific jurisdiction. Only when understanding what is it atypical, then we can sort it out whether there is any reasonable explanation for this atypical behavior. One of the things I have witnessed is when a law firm provides several services, because the key aspect is what services the law firm provides. If they're providing criminal defense attorney services, it would be good that they do not mix corporate and finance advice, tax advice to clients who are high risk and are serviced by defense attorneys of this firm. Because usually those clients are well for or with appropriate risk level for being represented in the court, but they're definitely not appropriate for receiving corporate finance or tax advice. The risk is unmanageable. And of course, the lawyers must act as lawyers, providing legal advice, but when they start to act like a party in business transaction or a fixer, then the line has been crossed. And then they are not a lawyer anymore. They are a party in some, hopefully just a business transaction, but most likely in some criminal behavior. And of course, lawyers, when they have been involved or they see money laundering, not all of them are reporting this, because it's one of their greatest sins to report the client, to breach a trust of the client. And somehow we must overcome this and understand that there is a line when the client has crossed this line, that the reporting must be done. And it shouldn't be a defensive reporting, but reporting which could help to prevent or stop money laundering or any other financial or other crime. So that's would be the short introduction of how lawyers can be abused. I think that the ways are different, but the main thing is to be vigilant, aware, ask questions, see where the deviation from the norm is, be critical on what their clients do and what services do they provide to which type clients.
Yeah, definitely. So you've mentioned various different ways there that the legal sector can find themselves enabling crime. And I picked up on your point there about kind of naivety and almost coming to business transactions as a party to that transaction rather than in their capacity as a lawyer. You've mentioned some tips, but do you have any other tips around steps the legal sector should take to ensure their services are not used for criminal purposes?
Yeah, first of all, define your risk appetite. Understand what principles will you follow when you approach a specific situation or maybe some questionable behavior by your client. Be critical on information provided by the client. Take training to be aware of how you can be abused of crime. Some clients, they tend to praise lawyers, pay excessive fees. Think about why they're doing so. This also is a red flag. If you see a red flag, don't close your eyes, just maybe start to investigate. Have a person within the law firm who is sort of investigative approach instead of just legal approach. It's legal, then it's compliant. Not always compliance is defined by being legal, but also by how the behavior of the persons can be characterized by many other factors rather than just a legal compliance. Of course, you need to see bigger picture as a lawyer, so how this legal structure can be abused. And of course, I would say that the risk assessments, it's not just a technical exercise. It is a meaningful effort to understand what risks are present specifically to your law firm. And this process sometimes is too formal in just checking the box approach without meaningful analysis. On many occasions, I see that law firms just ask their clients to fill out KYC forms. And when they are signed, oh, due diligence is done. I don't even need to read that. I just have a form. But actually, the form is just the first step. And those KYC forms, on many occasions, they are lacking the appropriate questions to mitigate the risk or even to understand the risk. That's why you need some risk officer at your office. Most likely the officer who has some background in the police, like Tommas, or some risk officer who has a banking background or similar. Because just being a lawyer doesn't mean that you will be good MLRO. Most likely not.
The tick box approach is something we've spoken about quite a lot in the UK, where kind of firms are collecting forms and collecting personal details, not necessarily looking beyond that. And that means their compliance might not actually be effective in actually detecting the money laundering risks and then actually being able to mitigate those risks further down the line. Jacquie, we lead the Professional Enabler Strategy in the UK, which we launched last year. And I think it's fair to say that strategy is quite holistic in its approach. And we're seeing a very key role for both law enforcement and supervisors in collaboration with the private sector to actually understand how enabling can happen, but then try and prevent that from happening, but also tackle it where enabling activity is identified. Supervisory bodies obviously play a very key role in the response to professional enablers, both in terms of supporting professional services sectors to prevent themselves becoming enablers, but also responding and tackling to enabling activity if that is identified within supervised populations. So from your perspective in OPBAS, what should supervisors be doing to tackle professional enablers? And what can members of the private sector do when they identify potential enabling activity to bring that to the attention of law enforcement and supervisory bodies?
Thanks, Alice, and thanks for inviting me to participate, because these are really important questions that you've asked of all of us. For those listening who may have not come across OPBAS in the past, our role is to ensure that the 22 AML supervisors for the legal and accountancy sectors specifically in the UK are effectively supervising their members. So if you like, we supervise the supervisors. And we supervise our supervisors. This could get quite tongue-tied by undertaking assessments of their effectiveness. And in fact, one of the things I've written down has now been mentioned by both Edgars and Alice, which is about avoiding the tick box approach. One of the things that our supervisors can do when they are thinking about how they set up their assessments of their supervised populations is to think about how they are assessing their risks and how they are deciding what are their highest risk population members. And then when they go in to assess those members, what they are distinctly looking for. Now, I think the UK approach is quite good. There's always room for improvement. But in spite of that, I think we actually are one of the first countries to try an approach of supervising our supervisors in this way, which means that we've done a lot of learning over the last 5 or 6 years that OPBAS has been in existence. And I think that one of the things that has come out of that is the realization that only by working together can we actually make the impact on money laundering and other economic crime that we need to make. So we've mentioned professional enablers, Alice, about co-leading the strategy. So public-private partnership, thinking about what we need our supervisors to do. We need them to work with others in a cross-system approach. And that's what the professional enablers strategy that you and I lead is all about. We need to reduce the risk of enabling behaviour, whether it's witting or unwitting. We've talked about negligence, I think, over the last sort of 20 minutes or so. We need to help populations better understand what enabling is and how it can be effected, and how things like this podcast can help you to identify that. So for our supervisors, we want them to undertake effective risk assessments. We want them to properly direct their activity at highest risk members. We don't want them taking a tick box approach to compliance. We want them to be looking at their members' effectiveness in their anti-money laundering controls. We want them to work together with others, both other AML supervisors, but also law enforcement and other organisations that are part of the fight against money laundering. And we also want them to invest appropriately in their AML activity. So there's a number of things that we work with our supervisors on so that we can try to improve the whole system for everybody. Then my last sort of point on that, before I move on to what the supervised populations can do, is to say that we also recognise the importance of international partnerships. So although we in the UK do have a cross-system approach which we're trying to develop, we can't do it alone. We cannot do it without our international partners. And this podcast is a great example of that. We want to improve our response, both by learning from abroad, but also to improve the whole response by sharing our learning and knowledge with our international partners as well. Because where somebody has led, others may be able to follow. We believe it's a shared problem. It isn't just the UK that has an issue. So working with international colleagues is really important to our response. If I move to your second question, which is advice for the supervised sector, so those supervised populations that the PBSs supervise, there's a number of things you can do. We've already talked about one of those, which is when you're thinking about your own AML approach, your customer due diligence, avoid a simple tick box approach. One of the things that we talk about a lot, and I've said a few times already, is it isn't just about ticking the box. It's not just about complying with the letter of the law. It's about how effectively your controls are actually preventing money laundering or other economic crime. So always keep that in mind. Don't just tick the box and think that it's done. If you come across anything suspicious, report it. Generally, you may already be reporting suspicious activity reports to the UK FIU, who are the kind hosts of this podcast. But please bear in mind, and this is really important, that SARs are not crime reports. It isn't always enough just to file a SAR, because the FIU receives thousands and thousands of SARs every day. And if you suspect that criminal behaviour is ongoing now, and it might be causing harm to the public, then also report directly to law enforcement, your local police force perhaps. If you're unsure about what steps to take, ask your supervisor if they can advise you. Our supervisors, our 22 AML supervisors, have loads of information available on their websites. Use it. Train your staff. Show them how to find the information they need. Ensure that they understand their anti-money laundering responsibilities. Ensure they understand what the current risks and threats and red flags are. Encourage them to partake of continuous learning, whatever form that might take, and use information and resources that your supervisors and law enforcement are providing. In summary, avoid a tick box approach, improve understanding about why AML requirements are so important. Don't just say to your staff, if you're onboarding a new client, you just need to make sure you've seen their passport, blah, blah, blah. And I think Tommas and Edgars have both mentioned this. It isn't just about the basic bare bones of, have I seen a passport or a driving license? Yes, I have. It's what does that mean? If the passport is not a UK passport, are you comfortable about the jurisdiction? Are you comfortable that you understand which jurisdictions you may need to be more careful about? It isn't just about saying, yes, I've seen it, so all is well, that person's who they say they are. So to finish, I would say that I think our approach is good. I think the UK regime is responsive to emerging threats as well. We do our best to keep up to date and to be adaptable to changing circumstances, but there is still more to do. Our work with international partners is part of that. Some of the work that we still need to do is already underway under the Professional Enablers Strategy, which you can have a look at a summary of that via the NEC website. We'd also need to better understand enabling behaviour.
Thanks, Jacquie. I think one of the key themes that has been coming out of all of these questions and answers is kind of curiosity. So asking the right questions and genuinely being curious on how your services are being used and who the customer is, and just making sure you are asking those questions rather than accepting information without seeking to kind of clarify whether that's accurate or legitimate. So finally, and this is a question for everyone, if you could give one piece of advice to the private sector on how they can prevent themselves becoming involved in enabling crime, what would that be? So I'll come to Edgars first.
Yeah, I would say first and the most important is dedicate resources for managing this risk. Because also for law firms, real estate agents, notaries, doesn't matter, you name it, all of them, it's necessary that if you earn money, if you profit on the service, you must also include part of those profit to cover expenses for the compliance. You must hire people or train yourself if you are an individual professional without any employees, and dedicate resources for IT development. Because if you're a large law firm, for example, you will need specific IT solutions for monitoring your clients and doing due diligence. You will need to buy access to some international information resources. This all will take money. And some people within private sector, they say, it's not our business. We are here just to profit. It's a business of the state. So they must care about preventing crime. It's not about us. But it's a wrong approach. If you profit on providing services, you are a gatekeeper. So you must spend part of the money and include those expenses in the price of your service.
Thanks, Edgars. Tommas?
Yeah, I think one important thing is training. What I always see with real estate agents, they identify their client, they do their due diligence, they are asking about political exposed person, third country, etc. They ask this question. Of course, they have their ticking the box list, and if there's everything low risk, everything is fine. But what I see is that they don't see these typologies. The criminals are very intelligent, and they think before they buy a property, they think how to launder their money. So they are always a couple of steps they are in front of these real estate agents. So it's training typologies, not general typology, specific typologies based on case studies. Case studies means anonymized suspicious activity or transaction reports. And if you are able to connect this, and that means also collaboration and information sharing with FIU, with supervisory bodies, to understand when to submit a suspicious activity report and how to recognize all these typologies. And this combination means collaboration with these different stakeholders. And I think that's the most important thing, is really training typologies and to recognize. This helps to submit a suspicious activity report. My main job is only to, as a money laundering reporting officer, just to explain typologies and to talk about cases. These are my trainings. I don't talk about the law and stuff. The law it's written, everyone knows, article here, article there. We talk in my trainings, it's 4 or 5 hours only about case studies. And this is, I think, the most helpful things for real estate agents and also for lawyers to understand, okay, how they can misuse me as a lawyer for their criminal intent.
Definitely. And really seeing those typologies and how they might play out in different sectors or service provision. Jacquie, any last advice, either for the private sector or supervisors?
Thanks, Alice. I think we've already had 2 fantastic contributions on that. And I think I would end by saying, again, to supervised populations, the 22 AML supervisors that I've spoken about are committed to reducing the risk of money laundering, or to reducing the risk of enabling behaviour, and they want to help their members. So if you don't know, or you're not sure what you're seeing, or you've got any questions about something that's going on with one of your clients or somebody who is attempting to onboard with you, then ask. Use the resources that you've got available. Look at the stuff that's online. There's loads of it. If in doubt, ask. And that will also help you and your staff to better get a sense of what those red flags, those risks and typologies are. So that would be my final piece of advice.
Thanks, Jacquie. Some great pieces of advice. So that's us for today. Clearly, professional enablers is a very complex subject matter that we can't fit into one conversation. So I'm sure these conversations will continue. But I hope today's podcast has given some good food for thought on how we can better prevent enabling activity going forward. Thank you to all of our panellists for taking the time out of your busy schedules, and thank you for listening. To keep up to date with the latest UK FIU podcasts, magazines, and other guidance products, please visit the NCA website. Find the UK FIU on X, formerly Twitter, and also LinkedIn. You'll also find the full collection of UK FIU podcasts on Spotify and other major streaming platforms. Thank you for listening. I've been Alice, and this has been the UK FIU podcast.